Yo, what's up, and welcome to today's trade recap of the trade that I just took. And yeah, it was a pretty clean move that I caught, to be honest. So let's just go over the confluences really quickly. So as you can see, I was already having a bearish bias because we were overall in a downtrend. As you can see right here on the hourly and also on the 4-hour chart, we were definitely being in a downtrend. And yeah, so I was looking for shorts. Additionally, we were in that 1 hour bearish fair value gap right here. We were consolidating. Even pre-market, you can see we were wicking into this bearish fair value gap, kept respecting it. And yeah, this was a good sign for me that the price action is very weak right now, and it just wants to seek out these liquidities that are resting down here. I marked them out on the hourly. We had this hourly low right here, and this 15-minute low right here. These were for me very, very high draws of liquidity. If you just see this entire low resistance liquidity just got taken out after I entered my trade, and this was exactly what I wanted to see. And then, of course, also this is a high draw of liquidity, this low right here, and this low. So yeah, these lows were eventually my take profits, and yeah, damn, as you can see right now, market is pushing even lower. But yeah, with that being said, coming into market open, marked out low resistance highs. As you can see, we had a bunch of them. Ideally, I wanted to see even more highs here get taken out. We only took out this high right here, but obviously it would be better for me to also see this high get taken out, or these highs, like, yeah, or even that high, because we have still now resting low resistance liquidities up here that market didn't take out, and it would be more attractive to me to see like a move in these low resistance highs and then a move down. This would be, yeah, way more attractive for me to enter short, but my bias was short. We were in a bearish 1 hour fair value gap. We swept the 15-minute high with the first market open candle. So I scaled down to the 1 minute, and I was just watching how the price is behaving. And as you can see, we got a nice reaction to the downside directly after the sweep. We formed this bearish fair value gap on the 1 minute. So technically you have like two fair value gaps on top of each other, this one and this one. And what I like to do, if I have like two fair value gaps on top of each other, for me, I just fuse them together and it just becomes one big one, because in the end it's just one big imbalance. So as you can see, we tapped into that fair value gap. We also got our equilibrium from this swing high to this swing low, and we got a bearish reaction out of the fair value gap. So this was enough for me. I entered off of the bearish reaction out of the 1 minute fair value gap. And yeah, we also broke structure to the downside previously right here. Exactly. So we broke structure to the downside. This was not enough for me. We formed this fair value gap. We tapped into the fair value gap, got a bearish reaction out of it, and again, additionally, we hit equilibrium from this swing high to the swing low, and I entered exactly off of this right here. And then my target take profits, as I already showed you, was this 15-minute low, this 15-minute low, which was eventually an hourly low, and then this hourly low right here. And yeah, as you can see, the trade played out perfectly, took out all of my TPs. You're probably asking yourself now, like, why did I decide to put my take profits on specifically this 15-minute low, and why not on this one? You know, why not on this one? And the reason is just because if market already comes down, you know, and pushes this low to this 50-minute low, in my opinion and with my market experience, there's a very, very high probability that it will come all the way down and seek out this high draw of liquidity, which basically marks the bottom of this entire cluster of 50-minute lows right here. So what I'm trying to do is I always try to search for a draw of liquidity that is very very likely to get taken out. So I could have also marked this as my first TP, but yeah, come on, like when market pushes down until here, it will probably also seek out this 50-minute low, which basically marks, as I said, the bottom of these entire low resistance liquidities. And if market already decides to push down, it will probably go all the way down. But this is just from my market experience. Yeah, the same way with. Oh wait, let me just erase this. It's the same way with this low right here. This is so pregnant here. You know what I mean? Like this is so obvious that this is a draw of liquidity. There's no other low right here. It's only this one. And then you have another 15-minute low or 1 hourly low in this case. This is just left alone here, and it's a high draw of liquidity. Maybe I should have taken that low as my TP instead of this one right here, because you can see eventually it also got hit. So yeah, so you see, even setting up your take profits is a very important thing when it comes to trading, because obviously you want to maximize your win. But in this case, it was a nice win for me. These were all my confluences. Nasdaq, by the way, moved the same way. This was potentially the trade that I would have taken on Nasdaq. We had the same setup. We swept the 50-minute high, market open. I can show it to you also again. We swept this high right here, this high, and immediately after we swept this high on NQ, same setup. We formed a bearish 1-minute fair value gap. We tapped into that, got a breakout structure to the downside, even with that candle here already. And then we just moved lower and took out all these draws of liquidity. But eventually I decided to take this trade on ES because the sweep was bigger and I just felt more confident on the S&P. So yeah, this was the trade that I took just now today. And yeah, I hope you guys learned something. Hope you guys stay healthy, and I see you in the next trade recap. Bye.